please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, back home on Dalal Street on Friday, Indian equities slumped to the levels that we've last seen more than 5 months ago. The Nifty ended below the 10,000 mark, while the Sensex closed with cuts of over 400 points. Mid-caps ended 1.5% in the negative terrain, while the banking index also underperformed. Well, we spoke to Jonathan Schiessl of Ashburton to get his sense on what he makes of the US-China trade war, as well as his views on the sectors he likes in the Indian market. Let's listen into that, and then we'll stack up all the cues you need to watch out for in trade today.
It is important. It seems China seems to be quite, constrained in its responses thus far. But I think, I don't think one can be too complacent here. It could easily get out of control. We've been fairly optimistic about this global recovery, that we still believe we're fairly early into a global recovery. Obviously, a global trade war could easily derail this recovery. So I guess that's what equity markets are trying to price in, the risk of a major global trade war. I still think anybody with a slightly more longer-term view, there's better value in that space now. And certainly if we hadn't already put additional monies there, we'd be looking at the moment. Again, in the short term, there's probably more downside to come in some of these names. We had been sort of cautiously upping our weights of certain financials, particularly the corporate banks. I think when you look at the valuations, we've seen quite a brutal and very fast derating of the private sector corporate banks, as well as obviously the PSUs. When you look at State Bank, for example, where it is on a price-to-book basis, yes, there's a lot going on. Clearly, a lot of government policy still seems to be coming out. RBI policy, we're getting new stuff all the time. It feels like we're reaching a point where perhaps these things will bottom out. But as I said, anybody with a slightly longer-term view with the current valuations that we've got in those areas, I think it's not a bad entry. We'd actually reduced significantly our position in Hindalco a couple of months back. We still do have a reasonable size investments in that company. I think probably at the fringes, steel is beginning to look more attractive. I think the steel counters have come under some pressure. And obviously the steel names in India, Tata Steel aside, are predominantly domestically focused. And obviously, with the recovery that we're seeing, I think the steel counters probably do look quite interesting here after this sell-off.
Okay, well, Nigel, now over to you. What do you think setup looks like today?
Well, Ekta, in Friday's trading session, a lot of those bulls would have been happy because at one point of time, the US markets were trading in the green, but they ended well in the red. Now, early this morning, you have the Asian markets. Yes, they're under some pressure, but the Kospi, that one has recovered a tad bit from the low point of the day. Remember, some of these markets were down between 2 to around 4%, and the SGX Nifty is indicating a mild red start. So, at one point of time, some would have thought that maybe 30-40 points is what we could see. Well, around a 20-point downtake is what we could see. That's still bearable. Now, remember, in Friday's trading session, we started off in the red, but we didn't see any big incremental selling from there because we started off at around 9,970. The intraday low was at around 9,950 odd, and we ended closer towards the 10,000 odd mark. Ending closer towards 10,000 mark is good, though we saw selling on every bounce in Friday's trade. Well, the FIs, they were net buyers. They pumped in a lot of money, but the DIs, they have made it clear. They, in fact, were offloading a lot of positions in Friday's trading session, selling close to around 900 crores odd. The only live indicator you have, is the futures and the discount are there. Now, the discount did come down from around 13 points to around 5 points, telling you there was some shorting at the top, and the FIs were selling. They sold close to around 2,000 crores in the index futures. And if you take a look at what they did, they unwound some longs and they added shorts. And now the long positions have come down to nearly around 37%. It started off the series at around 55%, and I've not seen the FI long positions at this level in a very, very long time. So they're net short on the markets, which in fact we get some good news, could be a bit of a blessing. But for the time being, the bears are in control, and they're going to be making money on some of those short positions. They bought 10 calls for every 1 put, so you'll say, well, they're expecting a bit of a bounce, but we'll have to keep an eye out on that front because they also wrote more calls than puts. They wrote close to around 10,000 calls on, telling you that, if we move even to the 10,100 level, we'll see some selling pressure. And in this series, well, the Nifty is down nearly around 400 points, 85 points to be precise. And there are a lot of cues that will play out. Remember, today is the last day. If you want delivery of shares in your account, well, today is the last day, because on T+2 is when in fact you'll get the delivery. That's on Wednesday. If you buy tomorrow, then in fact the delivery of the shares will come in only in the next week itself, because we have a truncated week. It's expiry week. The momentum is with the bears, but you never know what can play out, because could there be some NAV propping? We'll have to wait and watch, because this time around the markets are in a different zone altogether. So NAV propping, I'll put that with in fact a couple of question marks out there. You'll see the Nifty, well, is trading cheaper now in comparison to what it was trading at the peak, trading at around 17 times. But there are two big risks. We have seen the Nifty trade even at sub 15 times. So the big risk is, can we see derating of the PE multiple? And the second factor is that 17 times, you're talking about 20% EPS growth for the coming year. Can that happen with the kind of carnage we're seeing in some of those banks, PSU banks in particular? Well, some of those were, some investors were worried. Has the BJP's momentum been slowed down? Well, they won the 9th Rajya Sabha seat. So that's pretty good news. If you're looking at some momentum in terms of political view, well, that's something for you. A very small positive, because, it was a Rajya Sabha seat after all. When you're looking at levels today, 10,000 put, that's going to be very, very important on the downside. Why? Because we had close to around 6 lakh shares that were shared at around the 10,000 put, but it still has the highest open interest on the put side. So we'll keep an eye out on that front very, very closely. And the PCR as well, Ekta, has moved to around 1.04. Normally, we have seen that, when the PCR moves towards these levels, it's seen a bit of a bounce. It's not happened till this time around. Normally, at around 1.1, we have seen a bounce. 1.02, maybe that's giving you some reason that you could see a bounce, but expect a volatile trading session.
Okay, and what about the stocks?
Well, we were just talking about Brent crude prices at $70 per barrel. So that's not good news in terms of the fiscal deficit, but you'll have to keep an eye out on a few stocks. ONGC, that's one stock that normally gains when Brent crude prices move up. So keep an eye out on that front. And OMCs, they see some red, so we'll keep an eye out on those stocks as well. India Bulls Real Estate, well, they've sold a stake in their rental arm. So keep an eye out on that one. The deleveraging plan, yes, does play out there. We are at CNBC TV18, and Nisha did alert you that, yes, they're going to be having a meeting. So keep an eye out on that stock. Otherwise, the stock would have run away. But today, expect the stock to open up at least in the green. Sandur Manganese, when they have enhanced their manganese ore capacity. So keep an eye out on that at one of their mines. Bharat Financial, the stock is only around, I think, 3% away from its, the highs that we have seen. So that's been a relative outperformer when the markets have corrected close to around 10%. They've completed 2 direct assignment transactions for around 1,400 crores. So keep an eye on that stock. Well, MCX, the stock did get a bit of a beating. They're saying that they provided all the required documents in terms of that raid news that we had in Friday's trading session. It was down close to around 5%. Uttam Galwa, well, they're saying that BSE as well as NSE, they have declassified ArcelorMittal as a promoter of the company. Now, it may not have big repercussions on the stock, but for ArcelorMittal, now it's clearing their way to bid for SR Steel. Time Techno, some pledge on the promoter shareholding, so that stock as well has corrected quite a bit. Dilip Bilkon, they have incorporated a new SPV for a project worth around 2,000 crores roughly. Saturn Credit Care, keep an eye out on that stock. Well, IndusInd Bank, with the board, has got a seat on Saturn Credit Care. So keep an eye out on that stock. And remember, last week itself, NNBC took a bit of a knock because the board met and they said there's not going to be any interim dividend. There seems to be a rethink of sorts, because now the board, in fact, they're going to be considering interim dividend. So keep an eye on that stock.
Still tuned into Power Breakfast. Well, US President Donald Trump's decision to impose tariffs is worrying. That's the word coming in from economics professor at Harvard and financial advisor to the Kerala government, Geeta Gopinath. Speaking exclusively to Shireen Ban, Geeta said that we may be at the brink of a trade war if China strongly retaliates against Trump's decision. She added that India will also be impacted with this tariff imposition in the longer term.
So I think that's consistent with how Trump has functioned, because there's always been a bit of a disconnect between what he says and what actually gets done. Though I have to say that I am worried this time. I mean, for the last year and a half, we were all optimistic that because Gary Cohn was still in part of his cabinet and that would not happen. But he seems to have phased out most of the
including now the National Security Advisor.
That's right, exactly. Most of the pro-trade people, and he's being advised by people like Peter Navarro, who are strictly anti-trade. That I am genuinely worried about it. And the markets are clearly not factoring it in fully, but there is a higher risk of something going horribly wrong on the trade side.
So what do you believe, what is it that you're most concerned about? Because China has, of course, said that they will retaliate. They've put together their own list of where they see retaliation possible. What do you believe could trigger the next round?
So the concern is that China has said that they would put in these retaliatory tariffs, so that itself triggers a trade war. The next thing that happens is they're planning to complain to the WTO about U.S. tariffs. The thing I'm most worried about is if the U.S. starts completely dismissing the whole WTO system. Once that happens, if the the sanctity and the legality of the WTO is no longer valid in the eyes of the Americans, that can lead to a huge unraveling.
Would this be the single biggest risk factor when it comes to global growth and the global recovery that has looked fairly strong?
Yes, this is rather unfortunate. This is the first year when all economies in the world have been gaining steam. And so this is an absolute game changer. If this, really turns into reality and lasts for more than 2 tweets, I think this is hugely costly to the global economy.
What could the implications be for India? Because, they have moved the WTO against us. That process will, of course, play out. He keeps bringing up the Harley-Davidson example in relation to India. What do you see are the implications for India in all of this?
I mean, the implications for India are big, just like any other country. So even if India is not a huge part of the global supply chain, if there's going to be disruption in economic growth in different parts of the world that rely more on the global supply chain, that gets disrupted by this, it's going to have an effect on the Indian economy. And so I am worried about it.
Okay, then.